Hello everyone, welcome back to another fundamental basic video on investing in stocks. And today I'm going to run down my opinion on what makes a safe stock. So a safe stock would be a stock that, isn't gonna go down as much as other stocks when the market is bad. It might not do as well during a bull run, but it's not gonna do as bad during a bear run. So first of all, when we're talking about a stock, we're not talking about the ticker symbol and a price. We're talking about a company. And the stock reacts to what the company does. So we look at that one first. So you want to find a fundamentally strong company showing healthy growth. I'm not going to invest in a company that's not growing. There are many safe, boring stocks for companies that don't grow, but to me, that's a bad sign. So I want to see at least 5% revenue growth every year. You can easily check these numbers on many different websites, Nasdaq, Morningstar, Bloomberg, and so on, Yahoo Finance. Other things you should look for, so it's revenue growth, increased margins, so the company is becoming more profitable and more efficient, global expansion. A safe company is a company that makes money from different parts of the world and not just one country. If it only makes money in one country, it's very susceptible to swings in that one country. You want to see strong cash flow. So cash flow is how much money the business has as a positive during its operation. This is a very positive number. And you also want to see preferably increase in cash flow. You want to see a strong product portfolio, not just one or two products. You want to see several different ones, all doing pretty well. So you don't want a company that relies on one company or one website or one app, in my opinion. And you want a diversified revenue stream. So that can be different products and different categories. So, a company like Amazon, for example, makes money from many different things. Like they have the e-commerce business, they sell their own tech, they have AWS, they have streaming services, they have shipping, they have Whole Foods, they have clothing, they're going to get into the drug business, and so on and so on. Next one is you want a consistent demand for the product or services. So a phrase some people use, I don't see it used very often. It's just investing in breads and bullets. Two things we'll always need, right? Stuff like food, unfortunately weapons, banking, transportation and shipping, airspace, waste management. These things we will always need: energy, electricity, and so on. Some sort of internet connection, personal transportation, beverages and so on. So things that will always be around. And some examples from my own personal portfolio. You don't have to buy these stocks. These are just some that I own. Waste management, JP Morgan, Boeing, Lockheed Martin, and a stock that I don't own is Walmart stores, another one you can throw in there. These are some quite defensive and safe stocks that all show the signs I've been talking about. Other than this, you want a stock showing consistent appreciation, so the stock slowly and steadily goes up, and if it pays a dividend, you want to see the dividend being stable, and again, preferably a dividend increase. So the dividend keeps going up. That's also a sign of a healthy company. Because if the company can pay a dividend and keep increasing it, that means the company can afford to do so. And lastly, you want a stock and company showing a long history of stability, so stable leadership, stable price appreciation through ups and downs. So look at the company, look at it through crashes, corrections, depressions, pullbacks, and see how the company does and how the stock does. One glaring example is the financial crisis in 2008, which is the second largest stock crash in history. The stocks that sort of caused it and the stocks that was hit the hardest were banks. So at least US banks. And since then, JP Morgan, for example, has recovered incredibly well, while some of the other banks have almost not recovered at all. Same with European banks. A lot of European companies and banks have not gotten back since the crash in 2008. So that's 10 years ago. They're still not back at it. So some companies do recover better than others. So this is something you can look for. That's it for my checklist for safe stocks. Again, don't think too much about the stock. Look at the company, because the stock reacts to the company usually, and not the other way around. Sometimes there are some exceptions, but anyways. So, in these times, these uncertain times, we have high volatility. We have a little bit of a stock market crash now. A lot of people, are looking for safe stocks. So this is something you can maybe read up on. See if you can find any defensive safe stocks you want to put money in for a rainy day. And as always, I'll see you guys in my next video.